Simple money multiplier part 1. Let's say that the reserve ratio is 10%, and someone with $100 cash comes in and makes a deposit into the banking system. This $100 is in cash. They make a cash deposit, and this goes into that person's checking account. We call this a demand deposit. If it's someone from within inside the country depositing $100 into a commercial bank, then the total money supply is $100 because it's gone from cash to a checking account, which we call a demand deposit. Now, there's no change in the money supply. It's gone from cash to checking, so the total amount of money in the money supply is 100. The required reserves now, from the required reserve ratio, 10% of demand deposits is $10. The bank is required to keep $10 in its vault because of the required reserve ratio of 10%. That means it has excess reserves of $90. The bank can only lend these excess reserves. And so if the bank lends these excess reserves turn into loans, meaning now there are no more excess reserves. When these loans are given, it's usually a check written from the banker to the customer, and that person deposits it into his or her checking account. Now, once this occurs, once the bank makes a loan, then the money supply has changed by $90 for a total of $190 in the economy. The bank now has to keep $9, 10% of its demand deposit here, on reserve in the vault or on reserve with the Federal Reserve. And so it now has an additional $81 of excess reserves. If the bank lends these excess reserves, then it will now have $81 in loans. Once this loan is made, the money supply goes up an additional $81 for a total of $271 in the economy. Because there has been an increase in demand deposits here of $81, the bank must keep $8.10 in its vault. That means it has $72.90 in excess reserves. If the bank doesn't lend these excess reserves, then nothing happens to the money supply. If the bank lends these excess reserves, then it has no more excess reserves, but because it made a loan and wrote a check to somebody, we know that there's a change in the money supply of $70.90 for a total of $343.90. This process continues, and the money supply increases whenever banks make loans.